Welcome to the indices and the S&P 500. We are at 1950. We're expecting some type of correction here, and that is the case. And in fact, it may already be finished as well. So if I just drill in here a little bit, I'm going to go past this chart here into this chart here. So it's just the 2-hour chart here. And what we were looking at here is this being an A wave, a B wave, and a C wave for wave 4. It's very simple. It may get a bit more complicated, but if that's the case, then we'd be looking for wave 5 to make a new high above here. Once that's been in play, we should have wave 3 here of this degree, wave 5 of 3, and then a larger ABC correction again, coming back to the fourth wave of 1 lesser degree. So a bit of a classic trading levels pattern here, where we have the arrival, the reaction, the first high above the level, then the ABC correction, and then move up from that point there. So I've drawn it simply. It may get a bit more complicated than that. Also, we just need to be aware of this is like the alternative count here, as I've just pointed out here before, is that if this is the wave 5 here of wave 3, then we'll be moving back into the wave 4 of 1 lesser degree, the 38.2 retracement level of 1920. So we just need to see a little bit further development of this particular pattern here, and this is the same for the Dow Jones as well. In its move up, I thought it may have reached the 17,000, but not the case. So the wave 4 pulling back into the 16,822 mark here. That can be the low right here, because it does appear to be a nice 5-wave structure into this point here. And if that's the case, we'll see one more high up into the 1700 for wave 3 there. Nothing new with the DAX. We expected the selling to come in just above the 10,000. That is the case. So we're looking for a move back to the 9,900, where we'd see a bounce and covering these gaps, etc. So as I mentioned, the long trade had finished. There will just be, the swings will just get larger from this point here. I haven't actually pulled this apart here. It may even come down further. I'm not quite sure, but first of all, you can expect a bounce of short covering off the 9,900 here. The FTSE here is a little bit like the Australian market. It's just a bit messy and hard to pick here. I mean, this move up here on the futures here made a high above this previous high here, but on the cash market it didn't. So on the cash market it appears to be, from this point here, a simple A, B and C correction here that can have one more little low in through to here before it pushes up. But yeah, so it's a bit tricky, but it does appear that, you know, this move here of this A, B and C here is corrective. So yeah, look, we just got to wait out for these lows to come into play here. This is the point I made here, that on the cash market this didn't go as high here, so I can't really label it like this here. So this would normally be an A and a B and a C wave here off the cash market as such. So if I just drill into this little bit here, sitting on the top of group 1 here, it does appear to be corrective here because of this particular structure. If I drill in here further, this is where I can point out just on the 2-minute chart that it is corrective, because from this low here we've got this 3-wave structure here. So you know, unless we get a low, you know, below here, you know, this corrective structure is still sort of in play here. So it's probably an A wave to here, an A, B and C wave to here is the B wave, and the C wave to here, and then we break lower through here. So, and this is important for the Australian market as well. So when we're looking at the Australian market here, it's also, look, I just don't have a clear path for it. It's as simple as that. I mean, the move up through here on the CFD here appears to be in 3 waves, which is corrective, which would make a new low below here. But on the cash market, it appears to be 5 waves up through here, because this low that spiked down here is not there on the cash market, it's above that. So we've got up for 1, back for 2, 3, 4 and 5 up here. So this has pulled back more than the 61.8% mark. It's pulled back to the 78.6. So And that's okay, but it's really testing the boundaries of, what's acceptable and what's not. So I'm just a little bit, I can't give you a clear path. I could say that being on the 5400, 5450 here as support does offer like some upside possibilities, but it's just sort of weighing heavy. As I pointed out yesterday, if we're looking at this being wave 1 up here, that's fine. But this wave 2 here is really starting to get, it's bigger than this here, which is really not the done thing. Like, yes, I have seen it before, but it's never a good sign. So there is a bearish bias with this, as I've mentioned before. So we just got to see what Friday and Monday deliver as well. Thursday tends to be a bit of a bear market, so we've got that to contend with as well. Look, it's just really annoying, really, because none of the wave counts are clear enough to call in a confident way as such, and in through here is only going to get sort of bouncy as well. There's a couple of announcements this morning for this market. The inflation at 11 o'clock and the employment change at 11:30. But if it does move down through here, then it's only going to get bouncy through here anyway, and 54.20 as resistance would only see it move down further. So look, there's a bearish bias why it's under the midpoint here. That's the main sort of go here. This looks kind of impulsive up here. It looks impulsive, this move here, but this is still trading lower than the cash. So the cash closed at, let me just check, 54.54. So it's closed up here. So we've got that difference here, which will bring the cash market down at 10 to contend with this as well. So we'll see the market under this 54.30 here. But look, I just can't say anything. I can't sort of say or do anything. But the other point too that I notice is that the market on the daily is oversold and can bounce back from here. So we can make a new low and catch up with everything, and then have Friday and Monday as the bull run. But like I mentioned, we're really testing the perimeters of how far this can actually pull back as well. So, look, I'm afraid I'm not a big help here this morning on this one. Alrighty, cheers.